All right, so are you ready to dive into Bitcoin?
Always ready to talk Bitcoin.
Today, we're going to go deep into Bitcoin halving cycles.
Okay.
Now, I know our listeners probably already know the basics that every 4 years, the reward that miners get for adding blocks to the blockchain gets cut in half.
Right.
That's the halving part.
Yeah.
But what you shared with us goes way beyond that. It's this whole blueprint using these cycles to potentially build wealth.
Yeah, that's exactly right. This source that we're looking at today, it goes beyond just like the technical what of having and tries to connect it to market behavior.
Okay, I like that. I'm all ears.
Yeah.
So what's the first step to understanding this whole blueprint?
Well, they break each halving cycle down, which is about 4 years or 210,000 blocks,
Okay.
into 8 zones.
Oh, interesting.
Yeah, so think about like slicing a pie.
Okay, so each slice of the pie represents like a period within that 4-year cycle.
Exactly. Each zone's about 25 weeks except for the 8th, which is a little bit variable. And this breakdown helps us visualize like the rhythm of the cycle and even anticipate how the market might move.
Anticipate the market.
I mean-
Okay, you got my attention.
Yeah.
So are all 8 slices of this pie equally important in this blueprint?
Not quite.
Okay.
All the zones have significance, but zones 3, 5, and 6 are the most important.
All right, so break that down for me. What makes those 3 so special?
So zone 3, historically, that's where the cycle tends to peak.
Okay.
That's where Bitcoin reaches those like really exciting all-time highs.
Okay, so the top of the roller coaster before the big drop. So
Sure.
zones 5 and 6 then would be...
You got it. That marks the bottom of the cycle.
Okay.
And they say that's the best time to buy.
Oh, so the blueprint is saying that by understanding these zones and the patterns, we could like ride the waves and make some really good decisions.
Yeah, and to make it clear, they even overlay these zones like right on the Bitcoin chart.
Interesting.
So you can actually see how it plays out visually.
Okay, that's really smart, using visuals to actually see if it holds up. So this is based on multiple cycles or just like one?
That's what's cool about it. It's not just based on one. Let's take a trip back in time and look at a couple examples. Ready for some Bitcoin history?
Let's do it.
All right, picture 2014 to 2017.
Okay.
Like the Wild West days of Bitcoin. Super volatile, unpredictable, lots of unknowns.
Yeah, very small market.
Yeah, much smaller market, a lot of speculation.
So did the zones still apply back then?
It seems so.
Okay.
The source highlights that even in those early days, it looks like Bitcoin bottomed out in zone 6
Okay.
and then peaked in zone 3, just like the theory says.
So that's one data point.
Okay.
What about a more mature market? What happened there?
Okay, so let's fast forward to the next cycle.
Okay.
We see a pattern emerge a little more clearly. The first bottom's in zone 5, second bottom in zone 6,
Okay.
and then boom, the market peaks right around zone 3, just like the blueprint suggests.
Okay, so the second time around, it's like, hey, look, this pattern is repeating itself.
Yeah.
That's cool.
Yeah.
Are there any other details within those examples that stood out to you?
Yeah. So in zone 6, across multiple cycles, Bitcoin consistently retraced by about 70%.
Whoa.
Yeah.
70%.
Yep.
Okay. From its all-time high.
From its previous all-time high. Yep.
And that's what they're highlighting as the buying opportunity.
That's what they're suggesting, yeah.
Okay.
And they even point to specific buy signals in zone 6 and sell signals in zone 3.
So it's not just about the zones, it's about the indicators and when to buy and sell. That's cool. But, you know, I got to play devil's advocate here.
Yeah.
Past performance doesn't guarantee future results, right?
You're exactly right. That's important to remember. But seeing this consistency across multiple cycles is definitely worth digging into, right?
Yeah, definitely. So where are we now in the current cycle? And what does this blueprint say is going to happen next?
So they say that right now we're 18 weeks away from the fourth halving, which should be around April 2024. So if we follow the zone theory,
Yeah.
it puts a potential market top in zone 3,
Right.
which could be anywhere from March 2025 to October 2025.
Okay, everyone listening, mark your calendars. But it does seem almost too simple. I mean, is it really just about dividing up the cycle into these zones and then looking at these buy and sell signals?
It's not quite that straightforward. There are actually more things that they factor in as well, like market psychology, Fibonacci retracements, moving averages.
So there's a whole nother layer of analysis on top of this zone stuff. It's not just these dates. That makes a lot more sense. I think we need to do another deep dive into all these other factors.
Yeah, they're pretty interesting topics.
Yeah, absolutely. So we've laid some groundwork, explored historical examples, and gotten a glimpse into what the future might hold according to this blueprint. But before we move on, I want to hear from you, the listener. What stands out to you so far? What are your thoughts on this zone-based approach? What resonates with you, and what questions are popping up in your mind?
It's interesting that you mentioned the simplicity of this zone-based approach.
Yeah.
I think that's one of the things that makes it powerful.
Okay.
It gives you like a framework for thinking about these complex market cycles without getting like bogged down in all the little details.
Yeah, I agree. Bitcoin can feel like a wild, unpredictable ride.
For sure.
So having some kind of structure, even if it's based on, past performance, can be helpful for understanding the big swings.
Yeah, totally.
But it's definitely not a crystal ball.
No, not at all.
And it's only one piece of the puzzle.
Yeah, that's why those additional elements are important.
Okay, let's talk about those.
Okay.
You mentioned market psychology. What role does that play in all of this?
Well, market cycles aren't driven by technical factors alone.
Yeah.
Human emotions play a huge role, especially like fear and greed.
Oh, absolutely. Yeah. I can attest to feeling those emotions myself.
Yeah,
Watching the price go up and down.
everyone does.
So how does this blueprint account for the human element?
They bring in something called the Wall Street cheat sheet,
Okay.
which maps out the typical emotional phases investors go through during a market cycle.
Oh, so they're saying that those emotional phases might actually line up with different zones?
Yeah, that's the implication.
Interesting.
So like that feeling of euphoria and overconfidence when the market's peaking.
Right.
That might be zone 3.
Okay.
And then the fear and despair at the bottom when you're like, oh, is this the end?
Right.
That's zones 5 and 6.
So by understanding those emotional cycles, you could avoid making decisions based on fear or greed.
Exactly.
That's huge.
It's all about awareness, right?
Right.
Awareness of both the technicals and also the psychological factors.
Okay, that makes a lot of sense.
Mhm.
What about the other elements that you mentioned, like the Fibonacci retracements and moving averages? Can you just give us like a quick rundown of how those fit into this?
Yeah, so Fibonacci retracements are used to identify potential levels of support and resistance in the market. And they're based on this mathematical sequence where each number is the sum of the 2 preceding ones.
Oh, the Fibonacci sequence. I remember learning about that in school.
Yeah.
I never thought it would be used to analyze Bitcoin, though.
It's pretty crazy how these mathematical principles pop up in so many different areas.
Yeah.
So in this blueprint, the Fibonacci retracements can help to pinpoint potential turning points,
Okay.
adding another layer of confirmation to those zone-based observations.
So like another tool in your toolbox.
Yeah, exactly.
What about moving averages? What role do they play?
So moving averages are essentially trend-following indicators.
Okay.
They smooth out price data over a certain period,
Okay.
which helps to identify the overall direction of the market. So is it trending up or is it trending down?
So within this blueprint, moving averages would be used to confirm if the market is trending up or down in a particular zone.
Exactly.
Okay. So they're taking the zones, market psychology, Fibonacci retracements, and moving averages all together to paint a picture of the Bitcoin market cycle.
Yeah, they're really trying to connect everything and see the whole picture.
But this is just one approach to understanding the market.
Right.
What are some other frameworks that people use?
There's a lot of different schools of thought when it comes to analyzing Bitcoin.
Yeah.
Some people are really into technical analysis, using charts and indicators like we've been talking about to predict price movements.
Yeah.
Others are more into fundamentals.
Okay.
So they look at things like adoption rate, the security of the network,
Okay.
and, broader macroeconomic trends.
So this blueprint that we're talking about today leans more towards technical analysis.
It's mainly technical, but what makes it interesting is that it tries to bridge the gap between the technical and the psychological.
Yeah. I like it.
It realizes that markets aren't just driven by numbers.
It's people.
It's people making decisions based on their emotions and logic and all sorts of things.
Exactly. So for someone who's new to all this, who's trying to wrap their head around, Bitcoin and all these cycles, what would you say is the most important takeaway from this blueprint? What's the key thing to understand?
I think the main takeaway is that it provides a structured way to look at Bitcoin's halving cycles.
Okay.
It's a framework that helps you make sense of what can seem like a really chaotic market,
Yeah.
but it's not like a guarantee of success.
You can't just blindly follow the rules.
Exactly. You still have to do your own research and think critically.
Always a good reminder.
There are no guarantees with Bitcoin or any market, really.
Right.
But this blueprint, with its blend of technical analysis and market psychology,
Yeah.
it can be a really valuable tool for navigating these cycles.
Like having a roadmap.
Exactly. But it's up to you to decide which path to take.
It's about empowering yourself with knowledge so you can make informed decisions.
I couldn't have said it better myself.
So before we move on, I want to leave our listeners with a question. If this blueprint has held true in the past, how might it inform your understanding of future Bitcoin cycles? What other factors would you want to explore to validate or challenge this approach? Because remember, the world of Bitcoin is always changing, and our understanding of it needs to change too.
I like that.
When you first sent me this source about these Bitcoin halving cycles, I have to admit I was a little skeptical.
Oh, yeah.
Yeah. I mean, predicting market movements,
Yeah.
especially with something as volatile as Bitcoin, it's almost like trying to predict the weather.
I can understand that there's definitely a lot of hype in the crypto space. A lot of
Yep.
people claiming they have this like secret formula to
Right.
get rich quick. But I think what's cool about this blueprint is that it's a little bit more grounded. It's not promising like instant wealth or anything like that.
Right. It's more about understanding the underlying rhythm of Bitcoin. These
Yeah.
cycles that seem to repeat themselves over and over, even though each one is kind of unique.
Yeah, exactly. It's like the ebb and flow of the tides. You can't control it, but you can learn to navigate it.
Yeah, and this blueprint is like a map that could help us anticipate those shifts.
That's a great analogy.
Oh.
But like any map, it needs to be interpreted carefully.
Yeah.
It's not about just blindly following signals. It's about understanding the principles and applying them thoughtfully.
With a healthy dose of caution.
Exactly.
Speaking of caution, we should address the elephant in the room that we're talking about, a highly speculative asset class.
For sure, Bitcoin and crypto in general, they're still relatively new.
Yeah.
Lots of uncertainty and potential for big gains, but also big losses.
So this blueprint shouldn't be seen as a guarantee.
No, definitely not.
It's just one tool
It's a tool. Yeah.
that can help you make sense of this crazy market.
Yeah, like a compass.
Oh,
It can point you in the right direction, but you have to chart your own course.
I like that. It's just like a compass. This blueprint probably needs to be like recalibrated as we go.
Totally. What worked in the past might not work in the future.
So we always have to keep learning.
Always be learning. Yeah, that's part of what makes this space so exciting.
It's always changing. Yeah,
It's always changing. Yeah, always something new to learn and explore.
absolutely. So to wrap up this deep dive for our listeners,
Yeah.
what would you say is the most important thing to remember from all this?
I would say don't be afraid to question assumptions and challenge conventional wisdom. This world is full of surprises, and those who think critically and independently are usually the ones who do the best.
That's great advice. And remember, knowledge is power.
For sure.
The more you know about Bitcoin, the better you can navigate this market.
Exactly. And whether you're a seasoned investor or just starting out, there's always more to learn. So,
Always.
yeah. And who knows, maybe this deep dive has sparked your curiosity to go out and do your own research and discover something new.
That's what we hope for. And if you do go out on your own Bitcoin adventure, remember, the journey is just as important as the destination.
I like that.
So stay curious, stay informed, and most importantly, enjoy the ride.